afternoon. Yeah, I'll be live for the next hour till 4 that time. So yeah, I just want to talk a little bit about well, exactly what we've seen today, how economic events can have an impact on trading. So I think the most example that speaks for itself is this one, the Doge trade we just had in the 180-day challenge. So yeah, there was a reason for me to say let's put stop loss to break even, because if we look back at the trade, it started this morning. Let's see, let's have a replay from here. And by the way, guys, if you have any questions, just put them in the chat box, and I'll be happy to answer them. So with the Doge trade this morning, I'll take you guys through it and my reasoning for closing it early, or at least putting stop at break even. Let's see, replay, alpha update. Let's see, this was the point. Well, this was the confirmation candle of the breakout candle first. This was the confirmation candle which closed above. So that was my signal to give out the call. Then we went further. Well, you see we dropped down. We filled our second bid here. And still the setup was anticipating Doge to come down to this lower trend line and then back up above this trend line to have some continuation. Well, it did there, touched the trend line, the low trend line. It slowly a bit went beneath and then it went back up. Well, and this was the point, as you can see, around 2 p.m. local time, which was 1 p.m. UK time, that we first had a good move up. But as we were half an hour before CPI, I decided to put a stop at break even. And what happens next is the reason for putting this kind of trades quickly at break even, because as you can see, these are the 15-minute candles after the CPI announcement in this case. And you see a big wick up and a big wick down. So yeah, we wouldn't have hit, if I let it run as normal, it wouldn't have hit TP, but it would have hit stop loss. So that's just an example from like what volatility you see if we trade around these kind of events. So you also see this candle, the 1 hour Bitcoin candle, with a big wick up and a big wick down. Guys, can you please mute the mic if you still have your mic on? Thank you, guys. Okay. So these kind of wicks happen often when we trading, or if you trade around CPI. So shorts get stopped out, longs get stopped out, and we're back at level we were before the announcement. So usually there are two sort of announcements that are good to watch. and this week we have two of those. Like you can see here, we have the CPI. We had the CPI today, core inflation rate, and tomorrow we'll have the FOMC. So what are these two events? I've summed it up very quickly here. It's just info you can find online if you want to look into what the CPI is or what the FOMC is. The CPI is the consumer price index. It's just literally the inflation or deflation in America. Guys, if there's anyone with his mic on, could you please mute that? Thank you. So yeah, as you can see, the last year, this is a daily Bitcoin candle. You see CPI and FOMC's meetings on the chart, and this week they're together. So today and tomorrow. So we're expecting more volatility tomorrow too, and that's because somehow everything that happens in the US has a big impact on the market. Still has. Don't know if that will change in the future. So for now, you have to always take into account that these events happen, and even though it might not directly impact your trading or crypto trading, you always have to make sure, stay sidelined. That's the best thing. Like again, you could have the best setup available, like I said today, like I had a good setup, but you can get wigged out at both sides. And that's the volatility you usually see around these events. All right. Well, now we've had that event, we can do a little TA if you guys like that. If you have any questions, just let me know. I can answer them for you. If not, I will just do some TA on some charts, looking for some setups. Not for the 180-day challenge, because that's a trade a day max. So that was the Doge was the one for today. But just have a look. Let's have a look at the charts. This way. So yeah, most of you guys, if you have been in a live stream of me before, I usually look for a couple of things for a setup. That's I like to trade patterns, so looking for that, and trend lines with confluence and confirmation of EMAs, and also on higher time frames I will always use Fibonacci extension and retracements. So let's have just a look at some charts. As you can see, and you will see, this is the 1 hour chart, that most charts still move in a range after that dump last weekend. So that's still a range, and usually when it's sideways after a big dump, most of the times you will see a bearish pattern. what I'll usually do is just go through different charts, looking for anything I like. If you all still can remember, I did put out an Aptos chart a while ago, which I then cancelled because I think it was around 725 and 625 for entry. As you can see, it eventually went down here, but it was on this dump last weekend too. It would have stopped that out. So sometimes it's okay to cancel trades as they don't play out immediately. At some charts you'll see I still have things drawn on them. Let's get back to the 4 hours. This is a trend line, the 4 hour, excluding this wick. But as you can see here, that's why fib retracement and extensions are always a good indicator to use. Not only never use just one indicator, but as you can see on this chart, this is the Atom USDT. You see it has a trend line trending up, which is considered a bearish pattern, a bearish flag after a dump. So it's a small one, but as you can see, it's making this is the low, making higher lows. So at this point, still a higher low, but it looks like it's breaking down of the trend line, and it did visit the 786 Fibonacci. So for me, this would be a chart to watch. Let's make it a little cleaner. So we have a Fibonacci here. So what I would watch for is a breakout of this trend line and confirmation. Like you guys know, I like to trade breakouts and breakdowns. So this should be a breakdown, but also confluence of the 50 EMA. But for now, it's still in there, and there is no confirmation of a breakdown candle. So we'll leave this be. So what I'm doing, and I think that everyone for himself or herself should always find what works well. Alex, I think you have your mic unmuted. Could you mute it, please? I'm not seeing everyone, so yeah, thank you. I'm not sure who's. All right. So yeah, let's see this one. You can see a trend line here, which you could say it broke out of above the trend line it had since last Monday. But trend lines are not just for trading. You always would look for some kind of confluence. So if you want to see this whole move, you want to put a fib. You have fib retracement and fib extensions. I always use fib retracement because fib extension and fib retracement, drawing them will give you the same levels as let's see. You also see it went to the 236, but it's hovering at that point, so not a clean setup this. And guys, if you, I can't think of no one having any questions. We'll make the charting maybe a little more active for you guys too. If you have any questions, no question is silly, just know that. And maybe most of the times, if one person starts asking the question, the next will follow. So yeah, Bart.
Can you tell me what you need?
Yeah, of course. No. Yeah. As you can see, I have the black line here and the gray line. There's a difference for me. I'll show you two setups. I have the scalping setup, lower time frame, and the higher setup, EMAs. What I usually look for are the 50 and the 200. Those two I've always on the chart. And it's the gray one. The gray one is the 50, and the black one is the 200. Like if you read or hear about a golden cross, that's usually the 50 crossing the 200, or a dead cross is the 50 crossing the 200 to the downside. I also, for confirmation, have the 21 and the 50. The 21 and 100, sorry. So if I show these, you'll see two other lines, which is the 21 and this is the 100. So the 21 I use the 50, I use the 100 and the 200 for my main charting, and that's most of the times the higher time frame charting. For scalping I use, let's clear this chart because that played out. For scalping I use the 50 and the 100 because I just want, well, I think that works best for me for the setup I have for lower time frames. So that's the EMAs I'm using. Hope that's clear for you. So the 50, the 21 and 100 I will usually most of the time hide and just get them out if I see some things I like on the chart. Like I'm just looking at this one. You can see there's resistance, or there was resistance here, and that broke that resistance. It was an order block or resistance area. I usually call it the resistance area. And here you have trend line, which can act as support, but to go there it will have to lose the 50 EMA. So that would be a sign of a bearish sign. So for Confluence I would look at the 21 EMA. You can see that it's just above the trend line, so it could still be a possible entry. What else would I look at then? If I think, because this is not a very well, it doesn't tick all the boxes, let's just say it like that. So then I will draw the fib retracement from the local high to the low, swing low. You will also see it rejected here at the 618 and bounced here of the 0.5. So if it gets here, it broke down of the 0.5, so this wouldn't give me the confidence to enter a trade at this trend line. I would wait for either a breakdown or a bounce. But I don't really like entering on bounces because sometimes you see just a little bounce from the trend line, and after that it goes down. So for me, the confirmation needs to be breaking down like this, breaking down through the trend line, going back for a retest, and then continuation down, as it already had a retracement to the 618. So you'd say this is an area of interest if it breaks down this trend line. So who's up next? Who wants to ask some questions? Can be on anything. I'm here for you, so just let me know. If you don't want to speak up, it's okay. You can also put it in the voice chat at the right side. So just type it out and I will try to answer that. If not, I will just keep scrolling to the charts.
I'll be greedy. I have a second question.
Yeah. Go ahead.
Could you just go
Yeah, of course. Like I said, you have the fib retracement and the Fibonacci extension. The fib retracement, I have to say that one correct. The fib retracement you use to see how far price could retrace after a down move, and the extension is like where you can take profit. It's always hard to explain. I'll give you an example. Let's have a look at Bitcoin. To massive chart. I like this one. It has a clear top and a clear bottom. So let's remove the drawings. Let's remove the things I usually hide. So yeah, you can do two things if you want to draw the fib. You can draw the fib from the swing high to the swing low. In this case, it's a very short move because it was a big dump. Let me look for a better view. Let me hide some things so we have a better. All right. Fibonacci retracement. You draw from the low to the high to see where price after a move up can come back down to for continuation. Doesn't always mean it will continue, but you lots of times see confluence and see bounces at certain levels. I'm not sure if you guys can see it well. So if I'm going back to this point, this would be the chart. You can see here clearly a top forming. So this is the 2 hours. You have here the bottom. So this is the low. You have the high here. So if you're looking at this chart and you want to know where price can retrace after that move, you pick the lowest point on the chart and you draw the Fibonacci indicator all the way to the high. Then you have a couple of things to check. I think usually we see these are the retracement points, but these are the ones to really look out for. 618 and the 786, they usually tend to be good bounce levels, but with confirmation and confluence. So you want to see ideally also an EMA in this part or this region, or a support and resistance level. So if you can see here, you have a low, so you could draw support here. Make that black. You guys can see it better. Oh. As you can see, this line acted as support, broke down, acted as resistance a couple of times, back to support, and then we had to move up. So you draw this fib, you want to see where it retraces. Well, let's play it. Let's speed it up a little bit. And you'll see that like here, these Fibonacci lines can act as resistance or as support. Like you see here, it ends up at the 618. So this could have been a place too long, but like I said, it's below the EMA, so there's no confluence. The only confluence you would have was this support line. Then it broke through the 618, but it stayed above the 786. Touched resistance, support again, and all this time stayed above. Ideally, what you want to see happen after a fib retracement is that it bounces off 786 or the 618, but then continues, it moves up. But as you all know, May, June until now, well, it hasn't been the best of market conditions to trade. So this is the retracement. You also have the extension. The extension is just the other way around. Is if the extension, with the extension, you want to see how far a price can go up after a retracement. So you would look for a high and a low after a down move. So let's clear this one up and let's look for a good move down, so we can see if there are any patterns we can draw. Yes. Usually you look for extensions in an uptrend. So you can see let's see. Okay, this high, this low. I'm looking for a good one to show you an example of that, but this one could be a good one. Okay, let's get back to this point. We have the high here and the low here. You can't always say per se that the low is in, but you have a down move here, from here to there. So if you want to get a notice of where could this price get back to after the retracement, you can use extensions. Now you can draw them two ways. You can use the trend-based fib extension. What you then do is you go from the low, the swing low, to the high, and then back to the low. Ben made a video tutorial on YouTube about using fibs. So you will see here. But you also can use the fib retracement tool and just use it from the high to the low. And you'll see that they are exactly the same. 0, 2, 3, 6, 3, 8, 2, 0, 5, 0, 6, 8, 7, 8, 6, and 1. So I usually always use the fib retracement because with the fib retracement you can also draw the extension, but then you have to draw from the high to the low, and if you want the retracement, you draw from the low to the high. So let's say we want to get an idea of where this price could get back to, and usually you use this to find levels of resistance and places where you can take profit trades if you'd enter on the low. So let's see how this plays out. You can see here the 0.5, this is the 200 EMAs and the 50 EMAs. You see that this one got to the low and then moved back up very quickly. Even though you could say it bounces off these, sometimes it just goes through, like you see now. It stays between the 786 and here it breaks above the local high and just continues up. So there's two, like I said, two fibs. You can have the fib extension and the fib retracement. You can draw them with the same tool. The one you use, the extension you use to see how high price could possibly go after a retracement, and a fib retracement is to see how much a price will go down or where it will retrace to after a move up. So just take into account that it's just although the 618 and the 786 are most of the times levels that are reliable, doesn't always mean that when you get to that point that it will bounce or that it will reverse the price. So don't ever just enter a trade based on just the Fibonacci extension or the Fibonacci retracement. Yeah, I hope this a little bit can clear a little bit things up, Bart, for you. Yeah, okay. Yeah, just go and practice for yourself, looking for swing lows and swing highs, and yeah, replays. If you have TradingView, replay really helps. Just go back on chart and then replay it and just put it on a point and see if you can see some patterns. Like it's just a quick glance at this, but let's say you replay it to here, and like you see, you had a big move up Well, a quick glance at this chart could say, okay, I see some support here. Well, it's more like a resistance. I flipped them up, allowed to switch them up. And this is the high. You have here a resistance area. I can see a trend line here. With the 50 MA, so you can draw patterns for yourself and could think, okay, what would I do if I look at this chart? Looks like a triangle pattern with a little deviation to the upside here, a wick deviation. So what could possible plays be? So if I'm looking at this chart, I would be looking at breakout, retest, continuation, or a breakdown, retest, bearish retest, continuation down, with the 50 EMA in the middle. Oh, sorry. So you could say, okay, I'm going to look what happens. It's a 4 hours, so it would take a while. So what happens if it goes up here? Where should I enter? You can use the long position or the short position to just put trades on your chart, and just for yourself get acquainted with it, just get to know the feeling of how to chart properly, and what works for you, because every trader has his own strategy. As you can see in our group, me, Ben, Harsh, we all trade differently, but also there are sometimes things that we look at the same. So yeah, let's say if I would be looking for a breakout of this trend line, well, at first I wanted it to be breaking out above and closing above, but also yeah, this would still a little bit concerning, as it tried, well, to get above here. And as you know, Harsh uses the SFP and the sweeps. This also could be a point that you could say, oh yeah, we'll sweep this price and we'll go back down. But in my strategy, I like to trade breakouts. So I would be waiting for a confirmed breakout, retest, and then I would enter the trade. I would put the stop loss below the lower trend line, because if it breaks that trend line, it would mean invalidation of the trade. So then you would also have to look at, okay, but where do I take profit? So I would then say you should definitely skim profits at around here. And I usually trade 1-to-2 ratio, sometimes a little bit more. But in this case, okay, this could look like a good trade, but it has to break out. And we're trending, making a triangle pattern, but it could also be called a bull flag, or it, like you see, you can see different things on every chart. So and then what you do is you just play it. Here you can put on the replay speed to 10 updates per second to 3-1 as you wish. So you can see if it plays out. Then you see here again, this is the candle close. So let's zoom in here. And then you see this would be, for me, a breakout candle. And I would be looking for a second candle trading above. You can see here it broke out and confirmed that there was a breakout. Then I would be looking to put this entry here. Let's go forward, see if it retraces, or maybe it just goes. At this point, I would probably have cancelled the trade because I wanted to see a retest here, but it already went so much up that it went to take profit of my original entry, original trade. So I would say, okay, the idea was a valid idea because we had a breakout and then we had continuation to the upside, but it never got back to my entry. So this is a form of how you can just play around on the chart, putting your ideas into practice. So you don't always have to wait until it plays out on the updated chart, on the live chart, but you can always look back and see, well, what would my strategy, or what would, if I'm looking for patterns, how can I spot them? What would this trend line do without having to enter a trade with real money or on a demo account? You can also just look at charts, use the replay button to go back to a certain point, and then find out if it worked. You see if this eventually it would have eventually this, if I would let that trade on, it would eventually have gotten to my entry, but also to my stop loss. So that's also why sometimes trade ideas are invalidated. Even though the idea was good, you have to cancel trades. And it happens more often, like I do on the 180-day challenge, because that's lower time frames. So that moves quicker. So you have to also be quicker to decide whether to cancel or not. So let's clear this all up. Hope this helps you guys to put your own strategy together and also look for what works for you, because even though I say I trade trend line breakouts and breakdowns and I use these indicators, it doesn't have to say that other indicators don't work or that other ideas aren't valid. Sometimes I put out a signal and then there are people just asking, but it may be a long, but someone could see a short opportunity. It's different. So I think what Elsewhere dropped your alpha this morning about, you just have to focus on yourself. You can learn from us. You can learn and see how we chart, copy our trades on your own chart, but really go look for the strategy that works for yourself, because in the end, that's the only thing that matters, that you have the trust and the confidence that your trades work more than they don't. So you have to know that you have an edge over the market in your trades. And with an edge, I mean that in the long run, more trades work than that they don't. So you win more than that you lose. And even like you see now on the 180-day challenge, even if you are just let's say there are pro traders that just are 40%, have a 40% win rate and still are massively profitable. It's not always about winning every trade. It's about accepting that losing is a part of winning. That's what I always say. And also be okay with losses. Cut your losses quick. If a trade is invalidated, move to break even as soon as you can, because capital preservation is more important than just making profit. You can have 3 days with losses. You only need one good day to make up for those losses if you use good, strict risk management, and also the same strategy. If you keep changing your strategy, that will always how would I say it, it'll make sure that in the end you lose, because you have to stick to your strategy. I had March and April were very good months for me. I had a 75% win rate. And then June came, and May came. March and April were good. May was a bad month overall for everyone. But it was my first month as an official trader on this Discord, and you see then that it wasn't about my strategy. You have to keep focus on that, and even I doubt my strategy at that point. Think, yeah, it doesn't work. Well, it worked 2 months or 3 months or 4 months, but 1 month with bad market conditions can make your loss percentage go up. But in the long run, the strategy I work with is still profitable for me. So yeah, if I can give you guys some advice, is just find that strategy that works for you and keep focusing on that and practicing and make it better and learn from mistakes. And like we always say in here too, it's a long run. It's a marathon. It's not a sprint. But you have to learn and stick to it and put your work in it. And I'm 100%, 1,000% sure that everyone in here can be a good trader with our guidance. I think that's eventually what everybody is here for, not just signals, not just following those trades, but it's a life skill. Trading is a life skill, and as I'm still full-time working dad, I also I can see now after last year that this can definitely be or will definitely be a thing that cuts me loose from working for someone else and just making and taking my own time freedom, because financial freedom is good, but I think time freedom is even more of a thing. So yeah, I hope these kind of sessions can help you guys. Even if you after this session think, well, next time I would like to have this answered, or this is a theme I would like to have talked about, like Bart had the question about the fibs. I can do it next time if I know what questions there are. Just DM me so I can take it with me, and then I'll make a sort of how do you say it, a presentation, or I'll put the live stream evolving around a subject. So I got 10 minutes to go, guys. Is there anyone who still wants to ask a question? Because I can talk all day long if I want, and I can tell you everything. But I think it's also good if you in here and you have a question, just ask it, and yeah, for the last 10 minutes. And if you don't, that's also good. Then I think if no one has any questions, we'll call it an end for today. I will be here next Tuesday too. We'll do this live stream every week. So, like I said, if you have any questions or themes you would like to be discussed during this stream, just let me know so I can make it a proper presentation for you guys. Thank you for your times, and we'll talk later.